Hello and welcome to your training videos. In this 5-video series, we're going to give you a complete overview of this Forex trading system, and we're going to teach you how to use it yourself to profit from the system itself. The video is going to be separated into 5 different parts. We're going to cover introduction and getting started. In this video, I just want to show you how you can get set up so that you can use the same charting software and follow along better. And then in video 2, we're going to talk about setting up your charts, and we're going to go through the basics of the indicators listed on those charts. And then in video 3, we're going to talk about short trades and give you real examples of short trades. And in video 4, we're going to do the same thing for long trades. We will give you examples of long trades and go through the rules for making long trades or buy trades. And then finally in video 5, we're going to talk about time frames, currency pairs, and some advanced ideas that can be used with this trading system. To begin with, an easy way for you to follow along better and learn this system better as we go along is to use the MetaTrader charting platform. Even if you use a different Forex broker for your trading account, it's going to be easier for you to follow and learn this system by downloading and using MetaTrader with a demo account while you are going through these videos. And I'm going to show you this online in just 1 second, but just to get started here, there's 3 places you can get MetaTrader for free. There's actually more, but 3 that I recommend and that you can get it from easily right now. You can go to Alpari MetaTrader, www.alpari.co.uk, and then on their site, click on Trading Platforms, and then download and install MetaTrader from their site, and you will have the same charting software that we're using throughout these videos. You can also go to FXCM, another popular Forex broker, fxcm.co.uk. Put your mouse over Trading Platforms at the top of their site and then click on MetaTrader. And then finally, another popular Forex broker, FXDD. If you go to www.fxdd.com, click on Trading Software, you can download FXDD MetaTrader 4 and use their charting platform as you go through these videos. Using MetaTrader as you learn the system will allow you better to see if there's any differences between your charting software and the charting software that the system has been set up and tested with. Some charting software use slightly different rules for their indicators, so using MetaTrader 4 will make it easier for you right from the start, and especially while you're learning this system. Let's go online and take a look at how to get these MetaTrader installations, and you can download MetaTrader for yourself. Okay, just to show you online here, I'm at alpari.co.uk. This is the first place where you can get MetaTrader. You just go to their website, click on Trading Platforms, and then the first one they list is MetaTrader. You can click Find Out More About MetaTrader 4, and from this page you can download it for your PC, and if you need help installing it, they have instructions to do so on their site. The next site you might go to is FXCM. This is another big Forex broker that includes MetaTrader as a platform. Their site is fxcm.co.uk, and again we just put our mouse over Trading Platforms, click on MetaTrader 4, and then you can download MetaTrader from their site and install it as per the instructions given on their site. And then finally, if you go to fxdd.com, you can click the Trading Software tab right at the top, and FXDD MetaTrader 4 is the first one on the list. You can click Demo MetaTrader 4 today. Downloading and installing from any of these brokers will make it easier for you to follow along throughout these videos. Once you've downloaded and installed MetaTrader according to the instructions on the site that you went to get it, you can easily open a demo account. All you have to do is open the charting software, fill in the information in the form that comes up right away, and then click Next. And then once you've done that, you'll be able to have your demo account. You can just click Finish. It will connect to your demo account, and you'll be able to use that to follow along throughout these videos and use the same charting software that we're using. Just to finish off this video, I wanted to give you the easy way to follow these videos so that you ensure you get the most of them. Right after you're done watching this video, move on to video 2. We're going to set up your charts and give you a basic overview of the system, and then watch video 3 for some examples of short trades. And then watch video 4 for some examples of long trades, and then watch video 5, and when you're finished all of those videos, make sure you practice using this system with a demo account or with past data from the charts. Doing so will ensure that you learn the system well and you're completely comfortable with it before you put your own money on the line. The system will work very well for you. It'll help you get profitable in the long run with Forex, but it's important to practice and learn the system well before you start putting your money on the line. Hello and welcome to video 2 of your training. In this video I want to cover setting up your charts. We're just going to set up the charts, show you the indicators we're going to use, and then save those charts for easy access as we're learning how to trade this system. The indicators we're going to use in this system, I'm just going to give you an overview here, and then we'll actually show you how to set them up on MetaTrader. We're going to use an exponential moving average. A 14-period EMA in blue color is what I'm going to add to the charts. And then we're going to use a custom indicator, or at least it's listed as custom in MetaTrader, the Heiken Ashi indicator, and I'll show you what that is in just 1 second. And when you're adding moving averages to your charts, it's quite simple to do. In MetaTrader, they have the F plus button, the FX plus will add indicators. Trend indicators are right here on the chart, and you would select moving average to add your moving average, and I'm going to show you this again in just 1 second. And the Heiken Ashi chart is under custom and then Heiken Ashi, and we're going to use the default settings that come with MetaTrader, so I'm going to show you that. Let's just go set up these charts and save them so you'll have them throughout these training videos. Okay, so opening up MetaTrader here, all you need to do is get a chart on your screen. It doesn't matter which chart it is. If you don't already have one, you can just go to the Market Watch column on the left-hand side, right-click on any Forex symbol and click Chart Window, and then just zoom in a bit so you can see that the changes that we make here. And the first thing we're going to do is add a moving average. So we're going to go up to the Indicators button right up at the top here. We're going to click that little arrow down, and we're going to go to Trend and Moving Average. And in this case, I want to add the 14-period moving average. So if it doesn't say 14 here, type it in. We're using an exponential moving average, or EMA. So ensure that exponential is selected in the MA method, and apply to close is fine. Make sure you choose a blue color, or I'm going to choose a blue color. You don't have to. And then I like to make the lines big enough so I can see them, so I always select the second line for the line size. Once you've done that, just click OK. And now we have a blue line on our chart. That's our EMA 14. And the only other indicator we're going to use in this system is the Heiken Ashi indicator. That's under Custom. We click the FX button again, or the indicator button again, go to Custom, and then scroll down until you see Heiken Ashi and click it. It's going to open this little window. It says Custom Indicator. Red and white is fine. So we're going to just use red and white and just click OK. And then when we zoom in on this chart now, here's our Heiken Ashi bars and our EMA 14. Our charts are all set up. The last thing you're going to want to do is save these charts, which isn't difficult to do at all. We just right-click on the chart after we've added our indicators, scroll down to Template here, and then click on Save Template. And then just type in a template name. You can call it whatever you want. I'm going to call this Trading System 4, like so. And now I have that template saved. I can open up any other currency pair, so let's just do that. A US dollar, Swiss franc. I'm just going to open a chart window for that. And I can just right-click on this chart now, go to Template, hold my mouse over that, and then go down to the name that I just named it, Trading System 4. If you called it something else, then you would click that. And I just click it, and there we go. There's our charts on the screen here as well. It saved our indicators. It even saved the zoom level that we had set up. So now we're ready to start trading with this system. So assuming that you followed the steps we just took in MetaTrader itself, you should have some new charts that look similar to this. And make sure you save your chart. This will allow you to get easy access to it as you go through the rest of these videos. And just if you remember, as I said, just right-click on the chart, click Save Template, and then type in a file name and click Save. And then all you have to do on any chart is right-click and select your new template, and it will apply your new charts to the chart that you've opened up. And finally, just to give you an overview of what we're going to be doing over the next couple videos, this system is a trend system. By trading with the trends, we increase our chances of winning on our trades. So this system basically, it gives us the right entry point, allows us to trade with the trends. And in this case, we're going to trade the daily charts in the training. So open up a daily chart, apply your new chart to it, and then move on to the next video, and we're going to talk about short trades. Hello and welcome to video 3 of your training. In this video we're going to cover short trades. We're going to give you the rules for short trades, and we're going to cover some real examples of how to make those trades on the MetaTrader platform. So let's just get started here with the rules. When we're looking at the charts, the rules are for finding an entry point. We need to look to find two red bars. So the Heiken Ashi chart has the last two bars as red. That is criteria 1. If we've established that that criteria is met, then we look for EMA or the EMA 14 to be pointing down, and that's our second criteria. So if both of those criteria are met, we then look for the right entry point. To enter a trade with this system, we look at the first red bar. We need the price to cross over the EMA and close below it, so the price has to close below the EMA 14. And then we wait for the price on the second bar to break below the first bar's low, and then that's our entry point. And I'm going to show you this both on the charts and in examples as we're going through this. So if it's not clear yet, don't worry about it. So let's just take a look at this again. Finding a trade on a chart here, we need to look. Here are two red bars, and looking at the EMA, it is pointing downward. So our criteria is established. We have two bars, and the EMA is pointing down. We need to now find our entry point. And once again, when we're looking for the entry point, we look to see that the first bar has crossed below the EMA 14 and the price has closed below it, and that has happened in this case. And then once that has happened, we need to look at the second bar, and once the price of the second bar falls below the low point of that first bar, that's our entry point. So in this case, that red line drawn right there would be the entry point. So we enter the trade, and once we're in the trade, we need to manage it properly. In this case, it's quite simple. We set a stop loss of 100 pips, and I'm using daily charts in the examples for this system. In video 5, I'm going to talk about other time frames. If you use the 4-hour or 1-hour charts, don't use a 100 pip stop. This is solely for the daily charts that we're going to be trading in the examples here. And to exit the trade, we can either set a take profit at 2 times the stop. So if we're using a 100 pip stop, we would set a 200 pip take profit, or we can move the stop loss to the break-even point once the trade is 200 pips profitable, and then trail the stop at 200 pips. So that's an alternative exit strategy. In the examples, I'm going to use the 2 times rule. This is the simplest rule, especially when you're first getting started. Your profit is always 2 times what you risk, and it's a good way to get started. You don't have to worry about gaining less because you trailed your stop and it turned around on you. But as you gain more experience, you might want to use this alternative exit strategy as well. Trailing a stop isn't a difficult way to exit a trade at all. So let's just take a look at an example on the presentation here, and then we're going to show you some examples on the MetaTrader charts themselves. So looking here, we have a screenshot of a chart. We look to see that our criteria has been met. We have 2 consecutive red bars, and the EMA 14 is pointing downwards, and it is sloped downwards in this case. It just has a slight slope at this point, but it's still sloped downwards. So that criteria has been met. We then look for our entry point. The first red bar has closed below the EMA 14, so the price point, looking at the green line on the right-hand side of the bar, is below the EMA 14. Our price has closed below it. And then we wait for the price to break below the low of the first bar, and at that point we enter the trade. Entering the trade and managing the trade in this case is quite simple. So just looking at the trade on a chart here, we entered it when it broke below the low of the first bar. We entered at 1.4397. We set a 100 pip stop loss, so our stop loss was 1.4497, and we set a 200 pip take profit, which is 1.4197. And in this case, the trade moved in our favor. We made 200 pips profit in about 5 days' time on this particular chart. So a nice profitable trade, didn't last too long, and we profited quickly from it. Let's take a look at some examples on the MetaTrader charts, and then we can show you how to set this up and show you with real data how this works. Okay, so looking at our first trade example here, I'm looking at the Euro US dollar daily chart, and we have, looking at the chart, we have a nice long downtrend. And just to take a look, we need to first look for our criteria that we can enter a trade, or that we can look for an entry point. We need 2 red bars, which has occurred here. and we need the EMA 14 to be sloped downward, and in this case it is. It's got a downward slope to it, so we're assuming that we are in a downtrend, and we can look for an entry point. So looking for our entry point, we can look here that the price on the first bar has closed below the EMA 14, and that is shown with the green line. And then we will look for our entry point on the next bar. We wait for the price to drop below the low point of the first bar, and that would be our entry point. So just to show you that here, our entry point on this trade would have been about 1.5751. As we enter that trade, we're going to set a stop loss 100 pips above that. So that would be 1.5851, or about this point here, fairly close to that. And we're going to set a take profit level 200 pips ahead. So that would be 5551, about this point here. So we set our stop loss, we set our take profit. We do that all as we enter the trade, and if you do it that way, your trade is going to automatically, it'll either go in your favor and you'll take profit, and in this case that's what happened. It happened about a week later. It hit the 200 pip profit level, or sometimes the trade might go against you and you would hit a stop out at 100 pips behind. In most cases, with a trend system like this and trading the daily charts, the trends are going to be well established and you won't stop out very often with this type of system. The other alternative exit strategy that we could have used, we could have waited for our price point to move to 200 pips ahead. So instead of setting a take profit, we just wait so we're 200 pips profitable, and at that point we would move our stop loss to the break-even point and use a trailing stop of 200 pips. And in this case, that would have been quite a profitable way to do it. You probably wouldn't have stopped out down till this point, so you could have stayed in the trade for an extra week and a half, but you would have made 400 or 500 pips more in profit. So that's an alternative exit strategy. It's not always the best exit strategy to use, and I'll find a trade example to show you why. Let's look at one more trade example so you clearly understand how to find the signals and use this system. Okay, looking at another example here, I'm looking at the British pound US dollar on the daily chart again. And first, we're looking for a short trade, so we need to establish that our short trade criteria is met. We need to see that there is 2 red bars, and in this case there is. And at that point, we need to see that the EMA is sloped downwards. So just taking a look here, we've got 2 red bars. The EMA 14 is sloped downwards. So our criteria to find an entry point is met. We now look for our entry point. We look at the first red bar, and the price dropped through and closed below the EMA 14, and it did. And at that point, we then wait for the second bar, and we need the price to fall below the low point of this bar, and that's going to be our entry point. So just putting that on the chart, we would have entered this trade right about here. And when we entered that trade, we would have used a stop loss. Our price point here, our entry point, is 1.5972. So we would have used a stop loss 100 pips behind that of about 1.6072, about that point there. And then we would have set a take profit level 200 pips ahead to 1.5772. So that would be at about this point here. Not quite exact, but pretty close. So in this case, we entered the trade. The trade moves in our favor. At one point, it almost goes against us and stops out, but it didn't happen. It stayed still 30 or 40 pips away from that line. It moves in our favor, and in about 4 days' time, we hit our take profit level, and we exit with 200 pips profit. Alternatively, the other exit strategy that we could use is to trail our stop. In that case, we would wait for the trade to move 200 pips in our favor, and we would move our stop loss to the break-even point, and then just trail the stop 200 pips behind. As I said, that's not always the best exit strategy to use. Sometimes it's going to help you profit more, but sometimes you'll get the case where it moves past the 200 pip point, drags your stop down just a little bit, and then turns around on you, and then you end up making less on the trade. Which exit strategy you use is up to you. My suggestion is you use the take profit level as you're learning the system, and then move on to a trailing stop style of exit point as you learn more about the system and get more comfortable with it. Now that you know the criteria for short trades and you've watched some real examples of short trades, move on to video 4 to watch the long trade rules and examples, and then start practicing making these types of trades with historical data on MetaTrader. Because we're trading the daily charts with this system, using live data might take a while to practice that way, but it's easy enough to just simply look at the charts, find your entry points, and practice finding the right entry points. Hello and welcome to video 4 of your training. In this video we're going to cover long trades. We're going to give you some real examples of long trades and cover the rules so that you clearly understand how to make a buy trade with this particular trading system. So let's just start with the rules here. Largely these are the same as they were for short trades. The difference is of course that they're reversed. So in this case we're looking for two criteria again, but instead of looking for red bars we're going to look for two white bars. So we need the last two bars on the chart to be white, and that's the criteria 1 that we need to meet. And then once we've found those, we need to ensure that the EMA is pointing upwards. When the EMA is pointing up, we assume we're in an uptrend, and this is our second criteria. At that point, we need to look for an entry point. Our entry point comes when the first bar price crosses above the EMA and closes above it. And then at that point, we wait for the second bar to break through the first bar's high point, and that will be our entry point. So just taking a look on a chart here, finding a trade, we need to establish that we have two white bars. So we've got two bars that are white on this chart right after the red bar here. We need to establish that the EMA 14 is pointing upwards, and in this case it is. The EMA is pointing upwards. It's actually just turned from flat to up, but it had a slight upslope before. And then we need to look for our entry point. And again, as we're entering this trade, we first look that the first bar crossed over the EMA and closed above it. And looking at this bar here, the price point did close above the EMA. And then we wait for the second bar to break through the high point of the first bar, which it did. And that becomes our entry point. At that point, we enter the trade. And then once we're in the trade, this trade themselves are fairly automated. We set a stop loss at 100 pips, and again this is for the daily charts. When we get to video 5 I'll talk about some shorter time frames, but don't use 100 pip stops on a 4-hour or 1-hour chart if you decide to trade those. And we can exit the trade in one of two ways. We can either set a take profit to 2 times the stop, so if we were trading the daily charts we would set it to 200 pips. Or we can move the stop loss to the break-even point once we are 200 pips profitable and trail the stop at 200 pips. When you're starting out, again, the 2 times the stop method or method of reasoning is the simplest way to do it. As you gain more experience, you might want to trail your stop. It can help you gain more profits. So let's just take a look at a trade example in the presentation, and then I'll show you a couple of long trade examples on the charts themselves. So we need to look that the two criteria have been met. We need to first find two white bars. And looking here, we've got our criteria. We've got two white bars. The EMA must be pointing upwards, and in this case it is. And then we look for our entry point. The first bar has crossed over the EMA, and the price has closed above it. And then we wait for the price to break through the high point of that first bar with the second bar, which happened here. And at that point, we enter the trade. Once we're in the trade, we set a stop loss to 100 pips, and we set a take profit to 200 pips. So looking at this particular trade on the charts, we would have entered at this point here at 1.4015. We would have set our stop loss to 1.3915, and we would have set a take profit to 1.4215. And in this case, the trade moved in our favor. It took about 7 days' time for us to hit the take profit level, but it did hit the take profit level, and the trade was profitable. Let's take a look at a couple of examples in MetaTrader, and then you'll have a better overview of how to make a buy trade using this system. Okay, so looking at an example trade here, we're looking at the US dollar Japanese yen on a daily chart. And our first criteria that we need to look for when we're making a buy trade or a long trade is that we have two white bars, and we do right here. I'm looking at this bar and that bar. We have two white bars, and then we also need to establish that the EMA 14 is pointing upwards, and of course in this case it is. And at that point we look for our entry point. We look to see that the first bar we were looking at has crossed through the EMA 14 and has closed above it, and in this case it did. and then we wait for the second bar to break through the high point of the first bar, and that becomes our entry point. So in this case, on this trade, our entry point would have been 90.37. And when we enter that trade, we set a stop loss 100 pips back. So our stop loss in this case would have been 89.37. And we set a take profit 200 pips ahead at 92.37. In this case, the trade moved in our favor right away, and it took about 10 days, but we did hit our take profit level here. The alternative exit strategy we could have used would be to wait until we were 200 pips profitable in the trade and then move our stop loss to the break-even point and then trailed that stop at 200 pips. In this case, since we hit our take profit level here and then a few days later it reversed, we probably would have stopped out at this point and we wouldn't have made as much on this trade. But as you learn more about the system, the alternative exit strategy can help you earn more profits. And this trade itself is an excellent example of making a 200 pip profit in just about 7 days for this trade, I guess. And looking at another example, I'm looking at the US dollar daily chart again, Euro US dollar daily chart. And we need to look for our criteria to find a long trade opportunity. So we need to look for two white bars, which we have here. And we need to establish that we are in an uptrend with the second criteria, that the EMA 14 is in fact pointing up. And again, that's right here. It is pointing up. So at that point, we just need to find our entry point. We look at the first white bar to establish that it has crossed through the EMA 14 and has closed above it. And in this case, it has. And then on the second bar, we wait for the price point to break above the first bar's high point, and that becomes our entry point. So on this trade, our entry point would have been 1.4335. We would have went long on the trade at that point, and we would have set our stop loss 100 pips behind to 1.4235. And we would have set a take profit 200 pips ahead, 2 times our initial stop. So our take profit level would have been 1.4555. And in this case, the trade moved in our favor. And in 2 days' time, actually, we hit our take profit level. This would have been one of those cases where you would have actually made more if you trailed your stop. As an alternative exit strategy, as you hit this 200 pip profit level, you could have moved your stop to the break-even point and then trailed the stop at 200 pips behind. And in this case, you would have stayed in this trade for about 7 or 8 days more and almost doubled the profit that you made on it. But again, when you're starting out, the easiest exit strategy to use is simply to set a take profit level that is 2 times the level of your stop. So there's another excellent trade example, and in this case, we profited 200 pips in just 2 days. Okay, now that you understand how to use this system with both short trades and long trades, we've given you the rules for both buy and sell trades, and we've walked through some examples of both. You should move on to video 5. We're going to talk about time frames, currency pairs, and money management for this system, or some more advanced ideas such as money management. And then you should also work on practicing both short trades and long trades with this system. Doing so will help you get a better feel for it and ensure that you make the right trading decisions when you're using this system. For now, move on to video 5 and finish your training videos. Hello and welcome to video 5 of your training. In this video, I want to cover time frames, currency pairs to use with this Forex system, and some advanced ideas like money management. Let's just talk about what we're going to cover here. We're going to cover the currency pairs that can be traded well with this system. We're going to cover the time frames to use. Really, you should be using the daily charts with this system, but we're going to talk about how you can adjust it to the 4-hour charts as well. And then I'm going to give you an easy money management system. Managing your money in Forex is very important, and you should always use a proper money management system. It's the #1 way to protect yourself from large drawdowns and protect your profits and grow your account over time. So let's just start with currencies and time frames. The currency pairs that will work well with this system include the Euro US dollar, the British pound Japanese yen, the British pound US dollar, the US dollar Swiss franc, the Euro Japanese yen, and the US dollar Japanese yen. Any of those currency pairs will work well with this system. Since it's a trend system, it can easily be extended to other currency pairs, but when you're just starting out, use one of these to get started. It will help you learn it faster, and these currency pairs tend to trend for longer periods of time. For the time frames, as I said before, This system is best traded on the daily charts, but you could also use it on the 4-hour charts if you wanted to. If you're trading on the 4-hour charts, don't use 200 pip stops. Obviously, a 200 pip stop is too large for a 4-hour chart. You could use the same rules with a 50 or 60 pip stop and use it that way on the 4-hour charts. And then finally, let's move on to money management and show you an easy money management system that will allow you to manage your risk, avoid large drawdowns, and grow your account more over time. So let's just get started here. In this money management system, we're going to use a percent risk level. So we're going to always risk a consistent percentage of our account, and we're going to vary our trade size according to the stop loss that we're using. So with this system, to succeed using it, you're going to need to know your stop loss. And once you know that, we need to calculate a per pip value and use those two items to calculate the amount risk on a trade. And then using that information, we can calculate the proper trade size so that you're always trading the correct amount and risking the same level every time you trade. So let's start by calculating a per pip value. This isn't hard to do. Calculating a per pip value, here's the formula you're going to need to do it. You need to divide 1 pip with proper decimal placement, divide by the currency exchange rate, and then multiply it by the amount that you're trading. And the amount that you're trading is usually going to be either 100,000 for a full lot or 10,000 for a mini lot. And to just give you an example of how to use this formula, with the US dollar Japanese yen, we would take the per pip value with proper decimal placement. So with a Japanese yen pair, it's 0.01. With any other currency pair, it would be 0.0001. In this case, it's 0.01 divided by the exchange rate, 92.52, and then multiplied by the amount we're trading. So if we were trading 1 full lot, it would be 100,000. So in this case, it's going to equal $10.87 or 80.87 cents, or 1081 to make it easier to calculate with, per pip. And it's important to note that this is only necessary if the US dollar is on the left-hand side of the currency pair. Like the US dollar Japanese yen, the US dollar symbol is on the left-hand side. If it's on the right-hand side, such as the Euro US dollar, then the per pip value is constant. A full lot is always going to be $10 per pip, and a mini lot is always going to be $1 per pip. So once we have a per pip value, we can move on and we can calculate how much we risk on each trade. Using the per pip value from before, it's 1081 is what we calculated. If our stop loss was 50 pips on a trade, then we'd be risking 50 times $10.81 equals 540.50. For every lot we traded, we would be risking $540.50. And then we can move on and begin to calculate a trade size with that number. We're going to risk a constant percentage of our account. So our trade size is calculated from your current account balance. And we're always going to limit our risk to a certain percentage. And usually you're going to use 2%. Some more experienced traders increase that amount to 3%. And I've even heard of some using 4%. But 2% is a good number to use all the way through your Forex career. So if your account balance was $120,223 and you could risk 2%, then we could risk $120,223 times 0.02 or 2% equals $2,404.46 on every trade. That's what we could risk on that trade at the moment. So from that, we can now figure out how many lots to trade with this current trade. We can divide the allowable risk by the risk per lot, and that'll give us the number of lots to trade. So $2,404.46 was what we were allowed to risk with our current account balance. And with the 50 pip stop, we were risking $540.50 with every lot traded. So we divide those numbers and we end up, we're allowed to trade 4.45 lots. Okay, so we always round down once we have this number. We're not going to trade 4.45 lots unless you have an account that allows you to do so. If you can trade full lots only, you would trade 4 lots. If you have a Forex broker who also allows you to trade mini lots, you could trade 4 lots and 4 mini lots. When you're trading a system like the one we just taught you, you would divide that number in half and trade 2 lots as your first lot and 2 lots as your second lot. And if you had an odd number, such as 5 lots that you were allowed to trade, maybe you would trade 2 lots as your first lot and 3 lots as your second lot and keep the bigger lot in the trade. It's not really set in stone, but you do want to try and consistently risk that 2% of your account. Okay, so just to finish up here, some final thoughts. Before trading any Forex system, practice it until you understand it well and feel you will profit from it. It's important to learn the system well, use practice with a demo account, practice with historical data. The more comfortable you are trading a system, the more likely you are to profit with it. With every trade, always use money management. This is going to help you profit over time and avoid large drawdowns on your account. And when you're just learning any Forex system, it's easier for you to learn if you stick with 1 or 2 currency pairs. For example, stick with the Euro US dollar and 1 other currency pair while you're learning, and then expand into other currencies as you learn to use the system well. Doing so will help you learn it faster, and it'll also help you to profit more because you'll learn those 1 or 2 currency pairs a lot better. You'll learn how they trend and how they tend to profit, and it'll make it easier for you to make money in the long run.